Hi, I'm David Harrell, editor of the Morningstar DividendInvestor newsletter. In this monthly series, we take a look at the dividend prospects of three stocks that are popular with income investors. A.O. Smith is a fairly recent addition to the coverage universe of Morningstar equity analysts, but the water heater manufacturer can boast of a long streak of annual dividend increases, enough to make it a dividend aristocrat. While the company has increased its dividend at an annualized rate of 9.9% over the past 5 years, its yield is a relatively modest 2%. In their assessment of A.O. Smith's capital allocation, Morningstar equity analysts noted its 30-plus year streak of increases and said that they have no reason to believe it will deviate from that strategy, especially considering its consistent free cash flow generation and conservative balance sheet. They expect the current annual dividend of $1.36 per share to increase to $1.66 by 2028. The stock currently trades at a discount of a little more than 10% to its $82 Morningstar fair value estimate. Our second stock is also a dividend aristocrat. 2024's dividend increase made it 62 years in a row of raises for Coca-Cola. The stock currently yields 3.1%, with 3.4% annualized dividend growth over the past 5 years, and it trades in line with its Morningstar fair value estimate of $64 per share. Based on the cadence of announcements in recent years, Coke is likely to declare its next dividend increase in mid-March for the dividend that will be paid in early April. Morningstar analysts expect the dividend rate to grow in line with earnings over the next 10 years, with the dividend payout ratio stabilizing around 70%, which they view as prudent. StarBucks raised its quarterly dividend rate by 7% for its final payout of 2024, which was the company's 14th consecutive annual raise, and the rate of increase has been strong, at 13.8% annualized over the past 5 years. While a price decline late in 2024 had pushed the stock's yield up to 2.8%, above the 2.4% it has averaged over the past 5 years, subsequent price appreciation has brought the yield back to within its historical range, as it currently yields 2.2%. The rising price has also pushed the stock into two-star territory, as it's now trading at more than a 15% premium to its $86 Morningstar fair value estimate. Despite Starbucks' current challenges, its sales have declined for each of the past 4 quarters. Morningstar analysts project ongoing annual dividend growth, with a current annual rate of $2.44 per share rising to $3.18 by 2029. I'm David Harrell from Morningstar Dividend Investor. Thanks for watching, and we'll see you next month.